You were listening to ChartingWealth.com for Thursday, the 27th of April, 2017. We see that stocks are down for the day. Gold and 20-year bonds are up. It's about time. We have seen lots of up movement in the market, lots of down movement in gold and bonds. To see it reversed is interesting. Now, it's not a huge reversal. We'll jump right into it with the S&P 500 looking at the two-day chart. I tell you what, let's start with the weekly chart. What we see going on the weekly is, of course, we had a weekly vertical crossover going down on the 31st of March, and we saw the market go down for quite a while, over several weeks, and then, of course, over this last week, we have seen a bump up. We are seeing a little bit of deterioration in the down movement of the derivative oscillator, and we do see all of this up movement has caused the PPO, the price percent oscillator, our number one indicator, to start moving up toward the signal line. Have not seen a cross yet, but we have had a strong movement up. We have a strong up candle, green open box candle on the weekly chart. This is the first day that we've actually seen some down movement. If we look at the two-day chart, what we see is up movement over the last really three candles, green open box candles. We're only on the first day at the close of the market on Wednesday the 26th. We're only on the first day of the latest candle, and that is the one that actually we will wait to see that candle finish out. It will actually finish out on the 27th, Thursday, at the end of the day. Does appear, though, that we have a crossover going up. Hasn't been confirmed yet, won't be confirmed. If there's another down day, might not happen. But until we have that crossover on the two-day, we're not going to call it that. And remember, just because we have some up movement, it doesn't bring the whole market up forever, because we still have that weekly vertical crossover. We are noting alarm bells. If you are in a down move, of course, you wanted to go ahead and take that profit and not be stuck in this retrenchment as things move back in the opposite direction, particularly confirmed if indeed this two-day vertical crossover occurs. Of course, the number one sign is when the weekly crosses over. We don't want to wait until that point. If we do see the two-day rotate back over going down, of course, that would give us an opportunity to jump back into a down move if the weekly is still in a confirmed down move. So we'll see how things wrap up when that weekly chart, or that daily chart, the two-day chart closes on the candle at the close of business on Thursday. Now let's take a look at the Qs. That is, of course, the NASDAQ 100. It also is trying its best to cross over going up. Hasn't occurred yet. Again, down for the day, 0.14%. S&P 500 down 0.06%. Still in a confirmed weekly down move. The weekly is trying to cross back over. Hasn't happened yet. Derivative oscillator has still gained some energy, but again, that is a big, strong candle moving up. We look on the two-day chart. We see that, again, once it closes out, if it stays in the same positions it is in, that will be a confirmed up move on that two-day. We'll have that PPO crossover. Haven't seen yet the derivative oscillator flip over, but it looks like it's getting close to. So alarm bells, be very, very cautious after all that strong up movement. And again, we'll wait and see if this crosses back over. So again, lots of strong up movement. What is going on our bonds? Remember, bonds had been in a strong up move, and of course, once we started seeing the stock market in both the S&P and the Qs go up, bonds started to go down, and on that weekly chart, we have a red spinning top, lots of indecision there. Derivative oscillator still as strong as it was in the prior week. We do see that the PPO, the price percent oscillators, lost all the up energy that it had. It is kinked not over, but not going up as strongly as it had been. If, of course, we zoom into our two-day chart, we see that it broke through that week, the two-day trend line. It's also broken through at the end of the day the weekly trend line, getting close to crossing over, going down. Derivative oscillator losing a lot of energy. Hasn't happened yet, but may very well happen over the course of the day on Thursday. And again, pay close attention to that. If you have been enjoying that nice up move since the market turned around on that 2-day chart, crossed over, going up back on the 22nd, don't lose all of that profit that you had made. So again, be very careful there. And we go from bonds to gold. If we look at that weekly chart on gold, we of course see the PPO also not going up nearly as quickly as it had. Derivative oscillators lost some of its energy. We have a red spinning top. And we're getting close to, haven't violated yet that weekly trend line. Of course, have passed since violated the 2-day trend line. Let's take a look at that 2-day chart. What do we see going on there? Well, it's getting close also to crossing over, going down. Again, remember, gold and bonds are inversely related most of the time to stocks. Money flows to them when stocks are doing poorly, and from them when stocks are doing well. That is what we see happening. And again, we will see whether or not that 2-day crossover going down is confirmed. Now remember, we're still in a confirmed up move until and unless that changes on both gold and on bonds. So simply because the 2-day chart rotates over going down doesn't mean that there's a down play at this point. It means there's a pullback on the weekly, so just be careful if you think, oh, now it's time to jump into a down move on the 2-day chart. We don't call it that way. A down move on the 2-day does not mean that our weekly trend has ended, that weekly vertical crossover. So we'll continue to monitor these things, keep you apprised as we watch these markets on a daily basis. You have questions, problems, concerns, we love to hear from you. Chartingwealth.com is the website. You can sign up for our daily newsletter where we send you the video podcast that we do every day of what's going on in the market on these 4 ETFs that help you track broadly what's going on in both equity markets and in bonds and in precious metal like gold. So again, we track the S&P 500, the NASDAQ 100, the 20-year bonds, and gold. Thank you so much for being with us. Be sure to sign up for our newsletter. Let us hear from you, cw@chartingwealth.com. Follow us on Facebook, Instagram, YouTube. Please subscribe to that YouTube channel. And don't forget, we're on iTunes too under Charting Wealth. Subscribe to us there. Give us a 5-star rating. Say something nice about us. We so appreciate you. This is all about keeping you informed, educating you, having you do these practice trades with us until you get good enough to be able to make your own calls with your own money in the market. We're happy to bring you this education. From chartingwealth.com, God bless.